Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And today with me, I have none other than the wonderful Ben Jessel of Forbes.com. Hello, Ben. Welcome.
Hello, Aviva. How are you doing today?
Oh, I am so excited. We're going to be talking about one of my favorite topics, the manipulation or possible manipulation of Bitcoin. Because right now, there are quite a number of people who are, I don't want to say questioning, but yeah, questioning what is exactly happening in the whole crypto space and what is happening with Bitcoin. And even though I already have my theories on what's going on and why Bitcoin is retaining this upwards trajectory in price, a lot of people are saying that it is very likely being manipulated. In other words, the whales are playing again. But I am just going to ask you some questions because, well, I want to have this really deep discussion with you because there's a number of things, obviously, which are a bit concerning if people really do think that Bitcoin is being manipulated. Many people have said this, like I said, since Bitcoin has been around. So at this very moment in time, Bitcoin is tickling the underbelly of 40,000 per Bitcoin, which is kind of phenomenal, isn't it?
It's amazing how quick it went up recently. It kind of went parabolic. I think that's one thing I've noticed with Bitcoin is it sits doing nothing for a good old time. I think it was sitting around 10,000 for the best part of a year, wasn't it? And
Yeah.
And then suddenly it went up. It's got thousands of dollars a day. It was extraordinary.
There have been some articles which, and I don't mean in some trash papers, I'm talking about The Economist, the Wall Street Journal, I'm talking about institutional investors' own publications, i.e. Institutional Investor, which of course, they're the ones who have been buying Bitcoin like it's air. You have institutional investors as well as also these massive companies, Square, PayPal, Venmo, you name it. There's a ton of companies who are coming out and they're buying Bitcoin in the tens of millions, as in the case of PayPal did an initial buy for 50 million. And then I think they put in another order for another 50. Grayscale, of course, massive institutional investor.
They are.
Yeah. So you have people like Grayscale who I can't even remember anymore. I know it's somewhere upwards of 100 million in Bitcoin or something. They actually have the market. They're buying Bitcoin, if I remember, faster than it can be mined. So there's a lot of reasons which I have talked about over the last couple of podcasts why Bitcoin could be a natural attractor to new investors, the millennials, anyone who is really getting into this space now, who's young enough to know how to really properly use a computer and a phone. This is an attractive proposition to that demographic. And there's also this thing with stimulus checks, and the more stimulus checks get printed, the value of the dollar is not very great right now. It's actually shockingly low. Of course, if they do, as has been suggested, come out with more stimulus checks, didn't Biden say he's giving everyone $2,000 in the United States?
I've certainly seen that being tweeted somewhere. I know he's gunning for a $2 trillion stimulus plan.
If $2,000 stimulus checks are going to be issued in the next couple of months, if that happens, or even in the next couple of years, I mean, you multiply that money out and, the U.S. deficit is going to be completely crazy and it'll really impact the value of the dollar. So the national debt right now in the United States is like $27 trillion, and it's obviously going to increase at also an exponential rate. If you start issuing check after check after check, you can see how people who understand finance are looking at this and they're going, holy hell, the US dollar is taking a battering. Let's have a look at this thing called crypto. Let's maybe dabble a bit in the market. You can see how this could cause the rise in value of Bitcoin. Do we have any concrete proof, do you believe, there's market manipulation, in your opinion?
I think proof is very hard to come by. There's certainly lots of theories, that's for sure. There's kind of little nuggets of information that you could tie together to make a case either way. I think that's the problem, right? It's kind of murky. One thing to bear in mind is that, the regulatory authorities of the US won't allow a Bitcoin ETF because they are so worried about manipulation. So I guess if they're worried about it, or they say they're worried about it, then it might exist. Also might be politics, right? So I think it's hard to tell. I think there's some interesting dynamics with Bitcoin that, if it's not manipulated, certainly make it slightly of a more risky asset than something like a normal stock or a bond, for a whole bunch of other reasons as well, which may not be because of manipulation, but actually just might be because of just all the parties involved in Bitcoin, and very different types of parties than you get backing a bond or a stock.
This is the thing. The average investor, as pointed out in Institutional Investor, the average investor never really used Bitcoin for transacting. You're not seeing millions and millions of transactions taking place anywhere. They're basically using this as an investment. And this is obviously making people think, well, if this really is the case and people are buying it, and I should say also losing it, because there's been so many stories lately about people, especially because the price is now hitting so high. So you have this surge, which has been happening ever since that first peak in 2013. And then, of course, you have the price surge that happened in December 2017, which we've talked about a million times on this show, when it went to just shy of, I think, 20,000 US dollars. And now, of course, we're almost at 40,000. No one's really using this on an individual consumer level. I have never been to a restaurant where somebody had said, can I pay in Bitcoin or Ethereum? Do you take Litecoin? I haven't heard any of these conversations. I don't know about you. I mean, look, you're over on the East Coast of the United States. I mean, have you heard this?
No, you're certainly right. It doesn't seem to have, the utility of it hasn't really been achieved yet. I mean, potentially places like Venezuela, where people do want to avoid putting money into their bank account because that money becomes worthless. I think there, but you're right. Kind of overall, it hasn't. And I think what's interesting about Bitcoin is there's a lot of flighty investors, right? If you look at GE, for example, the stock in GE. It's got some pretty solid investors, right? You got pension funds, you got all those kind of strategic investors. So when the price kind of goes up or takes a dip, you don't have all of these companies kind of running for the entrance or running for the exit in the way that you do necessarily with the Bitcoin crowd, right? You can see as it happens, there is this kind of this melt up. It starts appearing in the press a lot more. You start getting calls from your family. Should I buy Bitcoin? Should I buy Bitcoin? People then get FOMO. They see it going up, and then some poor sods buy it just at the top, and then it kind of ends up wilting down a little bit, potentially as some of the whales see this and take a little bit of money off the table. And I did see some interesting commentary to say that, there's obviously the group of folks that say that Bitcoin is a Ponzi scheme, right? There's minimalists and maximalists on both sides of the argument. There always will be. I think what's interesting, though, is there was a point that was kind of quite well made that, because it's quite difficult to exit Bitcoin, right? You could sell it, but it doesn't take much to move the market in terms of the price. So one argument to say what's happened is that the early people got in, they had the rise, and then it stalled. I mean, I think what's interesting with Bitcoin is it has a very different set of investors than you get with a mature asset like equity, like GE stock, right? I mean, GE stock is probably, 80% owned by pension funds. And pension funds aren't the flighty kind of people. They don't, decide to buy more or exit their positions, when prices go up and down so much. So you've always got that kind of base of people there that aren't going to be influenced by the price. Whereas Bitcoin is a lot more of that kind of retail speculative investor who respond very closely to the price. And there's an interesting kind of school of thought. And you always get Bitcoin maximalists and minimalists and people who think it's a Ponzi scheme. You have to take a little bit of a grain of truth across all of these these theories. And one interesting one that I did hear is that because Bitcoin is relatively hard to exit if you have a large position, what's really happened over time is that you had this initial adoption of Bitcoin in terms of people buying it. And then the prices kind of like stayed in this range, right? So the people who have it are going, how do we get out of this position? So what will happen is there'll be a little spike up and then you'll get a whole new group of people in, the kind of lesser fools, if you kind of follow that kind of theory of lesser fools theory. They come in, they take the place, those people sell to the new folks. And that's kind of almost where you have this kind of trajectory of crap, we're in this position now. We have to wait until that next spike of new interest. You know, every time there's new interest, your family calling you, your friends are calling you, oh, I saw Bitcoin in the press. Should I buy some? So there is an argument to say that it's a bit Ponzi-esque like that. It kind of needs this new fresh blood in order for folks to exit their positions and having made their money. So I think that's an interesting theory that's been doing the rounds. I mean, it is fair to say that just because Bitcoin is at $39,000, it's not actually worth $39,000. It's worth $39,000 for the $1 million or so you could sell at that price, right? And that next $1 million maybe you could sell for $38,500. So, I mean, that's the reality is the market cap and the price almost meaningless if you have a big position because you can never be able to sell it at that position. And there's the amount of people that would be able to sell that is really a lot of that facts on the ground.
But look at Grayscale. Grayscale is dumping their XRP, their Ripple, while they can do it. You know, they are literally shoving that out of every window they possibly can. You know, and they said that they're going to distribute the cash to the investors after they liquidate all the XRP that's held by the trust. But they did have a very strong position before the SEC pushed this lawsuit against Ripple, alleging that the XRP token is a security under U.S. law. So there's this new guy, Gary Gensler, who is supposedly being chosen by the new administration to be the next chief of the U.S. Securities and Exchange Commission, so the new SEC. And he's apparently made no mystery or no secret of the fact that he thinks Ripple is a security, and he is really not yielding on that idea of his. So if that is the case, then XRP will probably make good on their whole idea of leaving the US and probably setting up somewhere in Europe. I don't want to get off our main topic, but Grayscale had a position and they dumped it like no one's business. But then again, I guess they can afford to because look how much Bitcoin they have. Loss they would have in XRP is nothing compared to the gains they've made in Bitcoin.
And I think Grayscale is so interesting because they kind of package up crypto for investors in a way that investors can actually use it. And it's investor friendly, right? The funny thing is that one Bitcoin in Grayscale is actually valued a lot higher than a real Bitcoin in the real world, which is amazing. It trades at a premium. It's like having a piece of gold and saying, but if it's Grayscale gold, it's actually worth 1.3 times the price. And part of that is because they package it up in such a neat little bow that corporates like MicroStrategy, who've now got a $1.125 billion position in Bitcoin, they would have probably done it. I'm not totally sure. They would have probably done something like used Grayscale Trust because it's just very investor friendly. Get all the knobs and whistles you'd expect to get when trading something like equities. Someone's looking after your money for you. You don't have to worry about keys. It's got this thing called a QSIP, which means it could be independently reported on. So it's interesting to see Grayscale. They're a great barometer of not just kind of how retail investors are thinking about it, and retail investors are quite flighty, but how large corporates are thinking about investing their treasury. So I think that's super exciting. I think that's the way I look at it. It's a little bit like if you look at a wave, right? If you look at a wave, you can see, the undulation of the wave. But if you look really carefully, you can see little waves on top of that little wave, and then little waves on top of that little wave, in a fractal-like way. And I think it's a little bit what you have here. You've got the big wave, which is, Bitcoin was a scam. Okay, it's for techies. It is actually for people that don't understand the technology. It might actually be for some quite avant-garde companies thinking about investing. It's actually for bigger companies that are a little bit more serious. So I think you see that undulation of a wave. And then on top of it, you've got all of this kind of news flow of, is it manipulated? Is it not? This company's getting sued. OCC's jumping down the throats of this company. So I think overall, it does feel like it is growing in adoption. But I think there's going to be plenty of freakouts on the way up, on the way down, in those little wavelets on top.
I wanted to just mention when you were saying about the way they package it, look at what happened with wrapped Bitcoin. Wrapped Bitcoin suddenly is gaining humongous value. It's just crazy. They had a market cap of 432 quadrillion for a brief period. It sat.
What?
It was it even beat out Bitcoin, which had a valuation of 733 billion at the time. I have another theory about wrapped Bitcoin. It's along the same theory of if you put the word Bitcoin in any of these cryptocurrencies, people who are new to this market, which there are tons and tons of them because they all think it's easy gains, which very well is the case right now. Wrap Bitcoin is especially for use in DeFi. DeFi is not something for a newbie. To understand DeFi, you really have to be very genned up in what is going on in the whole entire investment space within the crypto sphere. So my personal theory is that people went down the list and they were literally like, oh, Bitcoin, okay, we'll buy that. Oh, this WBTC, yeah, we'll buy some of that. Bitcoin Diamond, Bitcoin Gold. That's what I think. There's a lot of press releases coming out, and one of them by a company you love more than butter, JP Morgan. They came out with this insane press release about how if Bitcoin becomes as popular with investors as gold, the price will rise to $146,000 US. What a stupid number. Not 150, wow. Not 140, not 200 is around. $146,000. So, $146,000. And you see, the thing is that they already know that millennial investors prefer crypto to bullion. They know this. Gold appeals to the older set of society. Crypto appeals to the younger set. And plus, with a lot of gold positions, you're not actually holding the physical gold. It's a paper-based activity. And of course, when you have crypto and you know what you're doing, you obviously, you have your crypto. It's people don't understand anyway half the time of what's going on with investments. But gold is nowhere near as volatile as cryptocurrencies, as Bitcoin. Nowhere near. Maybe it's going to flatten out a little bit. There was a little price correction, as you and I were just talking about. It was like 5,000, 6,000 price correction. Some people are saying the price correction's over. Some people are saying, no, it's going to have some more fluctuation. Who only knows? But gold is not as volatile as crypto. One of the things that I did yesterday when I was recording a podcast is I was looking at all of the cryptocurrencies that are on CoinMarketCap, and all of the crap coins, shit coins, all of the con coins, I would even call them, are also going up. People are investing in things they really don't have a clue what they're putting their money into, but they think because it's a fractions of a penny, some of these cryptocurrencies, they're thinking, okay, I'm going to have some of that. And then you're watching the market valuation. You're looking at the volume shooting up of some of these projects that I wouldn't wish on people I don't like. So, this is the thing. Investors in cryptocurrencies, of course, we always talk about this on this program. They have to really think about risk. It can be a gamble, crypto. Can any investment be, even gold, I guess, in some deep theory against crypto can be a gamble, but not as much so. Hedge funds and other investment funds, they like dicey investments where they can obviously make huge returns, which of course is prime for something like cryptocurrencies. You look at all the people with their shots on Instagram right now, Lambo, they're hedging on that bet. They're willing to take that risk. But guess what? The majority of keen investors with serious amounts of money, individual investors I'm talking about, and not the ones with millions of dollars, just the everyday ma and pa, I don't think that they don't want to play casino. It would be interesting to say that this market is maturing naturally. Sometimes I think to myself, is it really because of the volume of the everyday people that's pushing this up, or is it from market manipulation? And to be quite frank with you, I can see both sides of this.
There's also, we could talk about our favorite company, Tether.
Yes.
That's another gray, murky area. The idea of Tether is a stable coin that is linked one for one with Bitcoin. Unfortunately, that's not the end of the story, because it turns out the creator of Tether also owns an exchange, a crypto exchange too. And there seems to be this kind of rather kind of murky kind of trail of money where these tethers get kind of created, they get sold for Bitcoin, so people have to buy Bitcoin to buy them. That then increases the value of Bitcoin, and that's fine if there really is a one-to-one backing, because it really is real demand. But the problem with Tether is that no one has been able to get a hold of a bank statement that says this is really one-for-one backed. And even if it's not one for one backed, maybe it's 8 to 10 backed. That still means there's leverage and gearing in the system. Because they're offshore and all these things, it makes it very hard to tell. So there is this worry that these guys in the background are cranking up the price. and it's called the Tether money printer, by a little bit like the central bank, printing a whole bunch of IOUs that are actually not built on anything at all. Now, I mean, some of that has been disputed. Others will say that it's been completely disabused and it's actually not true at all. I don't actually know what the truth is here. Certainly we know there's a lot of fake volume that happens in exchanges. So there's a lot of kind of fake stuff that happens. There do seem to be very large whales that kind of come to life and make things happen in the market. It is a murky pool, whereas with a stock like General Electric, there are safeguards because that trades in the US and is registered in the US, and you have the SEC breathing down their backs, making sure they're doing good reporting. In this market, you could have manipulation in any part of the world, and the US government can't stop that. There's no one on your side necessarily to prove that indeed, this is being done in a way that's not nefarious. So that is the problem. And we're in this whole new space where we have freedom, right? I mean, we should be happy as crypto anarchists that, the government can't control us.
Tether to me is one of the stickiest, and not in a good way, cryptocurrencies out there that has somehow positioned itself in a way that it has become adopted as the de facto crypto dollar. It has. They have had such problems they've outright lied about what they have backing their cryptocurrency. First they said they had 100% of the funds, then it went down to, I don't know, something like they had 75% of cash backing it, because it was supposed to be 1-to-1. So they were supposed to have as much cash in the bank as they did the crypto. And then they said, no, we don't actually have that. That alone, the minute you start going down that slippery slope of lying, just everything stinks. And then, of course, you had Bitfinex, which is Tether's sister company. It had lost close to $1 billion after the payment processors' bank accounts were frozen and the funds were seized. And Bitfinex were covering up those losses by borrowing from Tether's reserves. I just don't trust anything that they say or do. And I really do think that there's a lot of disingenuous activity going on with them. Everyone is asking all the time what's going on with the backing of it, and still you and I will never know. Do you know that? Ben, that until somebody from the SEC goes knocking on their door, I don't even know what happened with the New York State's lawsuit against them, but until somebody knocks on their door, nobody's ever going to know. But of course, there's also questions about market manipulation on even, and the scales that they'd be able to do it. I mean, all you have to do is look at CoinMarketCap and look at the volume, look at the market cap of Tether. I mean, they can do a lot of damage. They're a classic case in point of one cryptocurrency, which, if you were to say to me, which one would you not believe in, it would be this one. I just don't believe them. And the thing is if we find out concretely, because a lot of people are saying that Tether are engaging in market manipulation. So what do you think about Tether and this whole space then, even after what you just said about what's happening within Tether?
Oh, it's so murky, isn't it? You're right. I don't think we'll ever know the truth for sure. And that's why I'm so happy to see, organizations like MicroStrategy come in, and Square, and, also bear in mind that PayPal, God bless them, rolled out the ability for 330 million people to buy Bitcoin. So what I'm hoping is that over time, the people and the companies that will be holding Bitcoin will be like the foundation, like the rock. Yeah, they'll be the strong hands. So, a lot of this Tether stuff, even if it is found to be fraudulent and wrong, is not going to affect things that bad, because there's stronger hands that aren't going to get spooked. I think that's the important, maturation of this, is that if you start getting pension funds who are thinking on a 30, 40 year horizon, if you can get them to start investing in these things, then you're good, because you know that there's going to be certain levels that, Bitcoin or digital assets are going to be kind of always safe havens. And then that will take all the fear out of the market. So I think, we're on that path, right? At the moment, we're still in the in bandit country, right? And it's beginning to get a little sense of structure and foundation, but we've got to be careful, right? We've got to be a little bit careful that just because JP Morgan now says actually maybe it might make sense to have a 1 to 2% hedge with Bitcoin in your portfolio, that doesn't mean we're out the woods yet, right? No. That just means that there's beginning of a change in the winds that's beginning to materialize, but we're not there yet.
I don't even think the market manipulation is the strongest in any one holder. I think it really still has to do with the exchanges themselves. I think it's very much like we've talked about before. I think it's the exchanges. This is where I think the large proportion of manipulation and fake trading volumes and fake values, this is where it's all happening. Because look how much money you stand to make. These are the people who are really rubbing their hands together going and singing, I'm in the money. There's no regulation really on this. No. I don't care what anyone says. There is no real regulation.
Yeah, it's a funny quirk in terms of the regulation, for this kind of stuff, right? Because you're right, these exchanges are not regulated as exchanges are like stock exchanges are. No. That's because Bitcoin's not a security. It falls to the CTFC, which is the company that does commodities, like wheat and pork bellies, right? But even so, because the CTFC has only really ever had to deal with commodity futures, right? You don't buy pork bellies to eat today, you buy in the futures. But you have Bitcoin, which is delivered today, but a commodity. It falls through the gaps in the kind of regulatory kind of environment, which makes things very difficult to deal with. I mean, I think a great example of what you were saying, Aviva, is if you look at BitMEX. BitMEX was the ultimate casino, right? It was a place where you could do 1,000 times leverage on a position, which is crazy if you think about it. But then there were all these kind of things that have been stamped out in regulated exchanges that still existed. So, for example, you still had BitMEX actually kind of trading in proprietary kind of ways. So they were actually betting on their paper. So all they have to do is have a look at all of the bets that other people have made or is coming into the organization, and they could bet against them. You shouldn't be able to do that in a regulated place. And then, mysteriously, BitMEX would go down for maintenance at very interesting times so that when it came back up, suddenly they were the wrong side of their trade and had become liquidated. And they really encourage people to kind of play this kind of betting game and to leverage high, and they would then liquidate people out of their positions very aggressively, and they make money on that liquidation as well. So, I mean, something like that, it was just a real casino. And I know obviously BitMEX is getting sued, through the wazoo at the moment, for racketeering and things like that. And that could be the worst excess that could be behind us now. But the big problem though is, a lot of this stuff is out of the reach of the US, whether it's Tether, whether it's, some of these other exchanges. Like Binance is a huge exchange. If you look at the exchange volumes on Coinbase, they are minuscule in comparison to the rest of the world. Because actually we've got regulation that's beginning to come in and rules that have kind of clamped down on all of this stuff. But a lot of it's going to be overseas, particularly in kind of Southeast Asian markets, and there's no way that can be regulated. It's a very interesting kind of world we live in now.
Well, yeah, because pump and dump is the order of the day, and no one does pump and dump better than the crypto market. Whether or not these exchanges are actively involved themselves, all you have to do is look at some of these exchanges that really have very thin order books, but they have hardly any liquidity. But yet this is happening, which is showing that there's something going on here. And obviously, this is something where not enough people are tuned in to understand that there is multi-exchange manipulation happening. Because if you go onto CoinMarketCap and then you go onto their exchanges tab. Do you do this? Do you ever go onto the exchanges tab?
I don't actually. I'm going to do it now.
Okay, so go onto CoinMarketCap. It says on the top cryptocurrencies and then exchanges. Yeah. And I mean, you can see exchanges all over the place.
Holy moly.
Yeah, keep scrolling.
Is that 15 billion?
Mm-hmm.
$15 billion, 24-hour volume on Binance.
Yeah.
Because Coinbase is 3 billion. It's a fifth of the size and it's number 3. But gosh, it really does show you, huh? Yeah. Binance is doing quite well.
Well, yeah. I mean, of course they're doing quite well. Leveraging your position across all of these exchanges and trading a lot of crypto. If you're really good at what you do, you can really impact the Bitcoin price by buying and selling these huge amounts in these spot markets. Our podcast is in no way to be construed as giving you, the listener, any kind of advice, any kind of financial advice, any kind of advice at all. This is your life. You have to do your own research, your own homework, your own due diligence, and never invest in anything more than you can afford to lose. So if you can't afford to lose more than $10, whatever you do with your $10 is your business. But the whole point of this is that where do you think Bitcoin is going to go from here? Do you think it's going to hit JP Morgan's 146,000 by the end of this year?
I think it's gonna take a breather for here. I mean, I've noticed that you get a big price movement every 4 years. I remember because I actually sold all of my Bitcoin the day after the last election for $700, I think it was.
Right.
It was worth then. Within that kind of year, it could have shot up to about 9,000. So I'm going to say we are done on our big leg up for now, and it's going to hover around this for a year or so, and then we might see it go up it'll go up and down, I think, by about $20,000 to $30,000. And I think you're looking at more of a 4-year time horizon to see something like what JP Morgan is saying. I'm not going to say it's not possible what JP Morgan is saying. I think it's about when. I think long term, it's certainly possible. I kind of feel we're done with our up leg for the time being. We've had our big dramatic move for a little while.
So on that note, it's been a very interesting podcast. We have talked about market manipulation and Tether and God only knows what. Ben, thank you so much for coming on here with some really solid points.
Fun and educated as always, Aviva.
Well, I cannot thank you enough. I would like to thank everyone for tuning into this week's Crypto and Blockchain Talk. Please remember to tell your friends and family about Crypto and Blockchain Talk and tell them that they can listen to us on a myriad of podcasting platforms, including now Vurbl, VURBL. We are so excited to be now on even their platform. So I think we're like on 30 different podcasting platforms, if not more than that. I should check. Anyway, again, don't forget we're on the usual social media platforms of Twitter, Facebook, and Instagram. But the best way to get in touch with us in case you have any questions or recommendations on what you want us to cover is by emailing us. So please email us at education@savvydigital. That's education@savvy, SAVII digital.com. In addition, don't forget all of these podcasts are broadcast on our sister radio station, crypto24radio.com. Again, crypto24radio.com, where not only news, interviews, and so much more for your listening enjoyment. Again, thank you for tuning in. Remember to be safe, be healthy, and we will see you soon. Goodbye.